Joe, you own a home, right?
One of these days, maybe someday. American dream. I'm still a few years off from that median first home buyer age. Where did it
You're not
just hit
quite at
40 or
this.
something like
You're
that?
not quite at this. Yeah, that's right. That's actually one of the points. That's right. Just been a lot of buzz lately around this like 50-year mortgage ideal that was proposed by the administration. Remember that, to like alleviate the housing affordability problems. I didn't think there was enough there really for a whole episode, and I kind of let it go. And the internet just descended on it and like tore it apart,
Yeah.
said it was totally crap. I didn't feel like I had a whole lot more to add to the conversation other than maybe a few counterpoints. But then there was this buzz around a quote unquote portable mortgage. Have you heard of that?
That one's more interesting.
That one's a little more interesting. And then I was like, okay, this is kind of at the top. And I personally don't have a super great understanding of the housing market. So I thought this would be a good opportunity for me to, dig into the details, figure out what's going on. I think ultimately the punchline is, though, and kind of somewhat of the clickbaity title that I had here, is I don't think really people want affordable housing.
Ooh.
Yeah. So
Shots
that's my
fired there.
thesis. That's my thesis. I think on average, people don't want affordable housing. Thank you very much. And I can say, as a homeowner, that's kind of true. Sorry, Joe.
What's that?
You're on the wrong side of this. I want to give you a few honorable mentions as to what other things we could have covered. Adriana Kugler, remember governor, when she resigned on August 1st, and we didn't really know why. And so, Trump used that.
Conspicuously silent about it.
Yeah, it was just a super plain vanilla resignation letter, like nothing in there of any interest. Just thank you, everyone. Great opportunity. Glad to serve, And then Trump was like, oh, this is because she disagrees with Powell on rates. We got to cut the rates. People were left to speculate. Well, we just found out that it was an ethics violation. Ethics. So her husband looked like he was trading stocks when he really wasn't supposed to, something like that. And you can actually, I think you
What
can
is
actually
it with
see the
these
stocks.
Fed officials trading when they shouldn't? Same thing
Does that
happened to
happen a
Rich
lot?
Clarida.
Oh, I didn't know that. Really?
The Robert Kaplan. This is all like in the last 5 years.
It's juicy stuff. The other honorable mention, I think we'll have to cover this sometime, is just these big releases recently in bank regulation. So the pendulum has swung tremendously, I think, to the other side, towards the deregulation side. And this has been going on for months. And we covered it a little bit, but it'd be worth doing an episode just listing all the ways, like what deregulation looks like at a ground level. And this is led mostly by Mickey Bowman. There's been this consistent whittling away, I think, at the pillar or the wall or the plague of regulation, depending on your viewpoint about regulation, that I think would be interesting to cover. Another one that we can't do, the ANZ Bank. You know about that in New Zealand? They got hit with a hefty fine. And there was a report, I think, that came out that identified cultural issues at the bank. So I think it's just employees
I didn't hear about that one.
Just being too nice to each other. It's not, not a big deal, mate. And not speaking up basically led to a bunch of customer ripoffs and unconscionable conduct, then quote unquote. So it'd be kind of interesting to talk about what kind of goes on.
Unconscionable from being too nice.
I read that, I think, somewhere. And then the last one, I think we really should cover, although I don't think I should be the one to do it. I think you should. And this is the Japan interest rates rising.
Oh, that sounds good.
That's a good one. Why don't you take that one? I know, you've been to Japan, you study the language. Mm-hmm. This is definitely much more markets oriented, which is you.
Yeah. I'm all in on that one.
Debt to GDP ratio, stimulus packages, honorable mentions, but let's get to the main story. So housing affordability hit the news lately. Again, 50-year mortgage, portable mortgages. Just to recap, I'm not going to spend a whole lot of time on that, but like the 50-year mortgage, basically you'd save a few $100s a month on the principal and interest, but then you'd pay basically 2x in interest over the life of the loan. The other problem is that the equity buildup in the house is way, way slower, because you can imagine at the beginning, hardly any is actually going to principal. Any of that monthly payment, barely nothing is going to principal.
It's all interest.
It's all interest. The internet's covered with this kind of analysis. Another YouTube channel that we kind of look up to, this Clear Value Tax guy. He did a video on this. We're not going to talk about that here. The only counter argument, if we wanted to add to the conversation, the counter argument could be just well, you could use these same arguments on the 30-year mortgage. Why aren't you getting a 15-year one or a 20-year one? Because it's all the same concept. But other thoughts that we could put in that I kind of had when I was thinking about this 50-year mortgage idea. It's kind of interesting because the yield curve doesn't even go out to 50 years. Like if you were to successfully implement this, you would like almost view finance differently, because the yield curve is something that everyone talks about all the time, and it ends at 30. Like there aren't so many 50-year treasury bonds out there. You could imagine
they don't exist.
The government would be interested probably in issuing some of those. But even if you take that idea a step further, you could have a 50-year treasury, you could have a 100-year, or how about a perpetual? You could have a perpetual bond. The yield curve could be infinite. There are some bonds out there today that never mature, and they will pay interest forever. So just a little side note.
The name mortgage itself comes from mort. You're supposed to pay it perpetually till you die.
Oh, I didn't know that. Joe, dropping all these nugget facts. I'll just mention Yale actually owns a perpetual bond issued in 1648 by a Dutch water board to finance improvement in a local dike system. It's a bearer bond. I think it's written on really sturdy, it's not even paper, it's like animal hide or something. And the bearer bond idea is the issuer, so the Dutch, water board will pay the interest to whomever just presents the physical bond. So Yale, they send a representative to the Netherlands every decade or something to collect on the interest, which is $150 for those 10 years. And, it's kind of silly, but the Netherlands are happy to pay since it just keeps that history alive.
Wow.
That's kind of cool.
That's really cool.
But, just to end cap this, the yield curve could be infinite. But right now it's 30 years, maybe it's worth 50. Anyway, the portable mortgage though, that's kind of interesting. In that sense, they would try to transfer the existing mortgage, so including the interest rate and terms, to a new property. So I can tell you right now, just to be open, we pay 3%, which is chef's kiss, I gotta say. Right now, my wife and I are paying on this house.
You got less credit risk than the U.S. government.
And no, we just locked in at a very good time. This was right at the beginning of COVID. We can show some charts later about the unbelievable amount of new originations that happened around COVID. We just got lucky. We kind of just started. It wasn't because of COVID that we bought a house. It was because we were starting a family and time to settle down. And it just life. Yeah, it was just really, really good timing.
I remember that, Luke. You had your wedding ceremony right there on the water,
it was
days
2 weeks
before COVID exploded.
Weeks.
Yeah,
2 weeks. And then later that year, got anyway, this isn't about me.
Why don't you just keep bragging about your home ownership and your low interest rate?
I'm definitely, now that I found out you're a dirty renter, a dirty, lowly renter, even worth my time.
I live in the city. I don't want to be tied down.
That's true. Yeah. So that's okay. So yeah, we're going to get to that. But anyway, the portable mortgage, it would basically be if I wanted to, one of the reasons why there's the idea of moving is just not even in the cards right now, is because I would have to give up on that 3% mortgage. I'm not even thinking about looking at it. You just can't even consider getting, 6.5% when I was just paying 3%. It's crazy. So the portable mortgage would say, well, look, you can keep paying the 3% on your existing mortgage. You're going to keep it when you just buy the new house. Conceptually, I guess that's kind of straightforward, but in practice, there are all sorts of problems with this. It's just the system is not designed to handle, people keeping a mortgage while they're changing the house. The mortgage goes with the house. It's possible that your mortgage might not even be on the balance sheet at the bank. It's probably going to be securitized by Fannie and Freddie somewhere. And now in finance, all these mortgage-backed securities models, which really revolve tightly around trying to predict prepayments, all that is broken. Legally, it's probably a huge mess because collateral and all that is going to be tied with the mortgage to the house. The whole loan to value consideration, which is super important in underwriting, like that's all broken. It would be, I'm not saying
Yeah.
it's impossible, but like the system is not, it's not like an
Yeah.
easy thing to implement.
I didn't think about this much, but if I start to, I just don't even like. I don't even know where to begin, like reasoning out how
You
it
would have
might
to,
work.
unwind like the guts of the whole financial like industry and try to like rewire it. It's not like just a legal thing. The other thing too is like this would throw a huge wrench into the mechanism by which the Federal Reserve controls the economy and by extension inflation. So like the fact that the Fed is able to raise rates and then slow the housing market is kind of like the point, right? I mean, they want it to be more expensive and they want to start slowing housing demand
Well,
by like raising the price.
that's not quite.
You don't think so?
No,
Why not?
that's the trying to move the elephant by wagging its tail. The Fed can only control the overnight front end rate. This was Greenspan's conundrum, his famous speech back in the early '90s. I think he was saying we're raising interest rates so much, but why aren't those long term interest rates moving? 30, 40 years ago, there was the expectation that the Fed raising the Fed funds rate would also raise the long end rates, mortgage rates, long end treasury rates, of which mortgages are tied to. But in practice, it just doesn't happen that way.
Point taken. I think it's worth looking into.
But these portable mortgages would just be another big complicating factor to the Fed as well.
So like whoever's designing this portable rate mortgage is probably going to get a call from the Federal Reserve, I think, and be like, look, you're kind of hindering our ability to do our jobs.
They'll call them and ask very nicely, like the Fed would, and then that FHFA guy, Bill Pultz, will tell them to go F themselves. And
Pound sand. Pound sand, I've learned, is the finance term. So those are like those two things. I'm not going to talk a whole lot about portable mortgage. I want to talk about the housing market. The first question I have is, are they really unaffordable? What's happening to housing prices? So just quick recap, the New York Fed has this really cool info chart. I don't know if you've seen this, that tracks housing prices changes by counties across the country. And they have like different colors and stuff, and they do it by time. I'll put a link in the description, and I'll probably just show it changing if you're actually watching. It's pretty cool. But for those listening, if you just look at a graph of the home price index, if it was set at 100 in January 2000, it rises at a pretty good clip, increasing rate until 2006 when it plateaued, and then it declined all the way to around 2012 before it started its upward trajectory again. Right after COVID, it definitely accelerated up. That's right kind of at the beginning of COVID. That's kind of when we bought our home. And I can say from firsthand experience, it was nuts. Couple stories. We knew it was nuts. I'll tell a little anecdote. So we were in New York at the time, and we were trying to buy a place up in Massachusetts, where I'm originally from. So we couldn't actually like go and look at these houses. So we had like a realtor. We were trying to do this through a realtor who was actually over there. And I remember there was like one house that showed up. That kind of popped up. It was a little bit outside of our budget, but we were like, oh, this is a great house, and we were talking to the realtor, go to the open house, please. But before the open house was even there, the realtor told us that it's off the market. Somebody came and offered, I think it was like 15% over the asking price in cash before the open house, off the market. And that's when we were like, we got to get really aggressive if we want to get a house. That was like the wake up call. Anyway, just in terms of the housing price trend, it reversed a little bit in 2022, and then it's kind of been going back up. So yes, housing prices have gone up a lot. A lot of that is inflation and the huge influx of cash after the COVID stimulus. But are they like quote unquote unaffordable? Now, to some, sure, but people are still buying them. So like just last week, we got the quarterly household debt and credit report from the Federal Reserve. So you can actually see like the amount of new originations, what they look like over time. Mortgage originations were still at about, as much as they were when rates were like zero, which kind of surprised me. The first point here is people complain about housing affordability, but there is still a market for buyers and sellers. I will add though that the average age of the first time home buyers is going up, as you mentioned. But maybe that's not so much because of affordability, but maybe because people are getting married later. Usually, I think marriage and like buying a home kind of go and starting a family and all that are related. They certainly are for me personally.
I know more than a few people are going to bristle at the idea of saying, are they actually unaffordable? People point to the amount that housing prices have outpaced inflation over the past few decades is like almost a factor of tenfold or like sevenfold or something like that. And then people point to also decades ago, like mid 20th century, I forget what the number is, but like the average home price or whatever median home price was, I don't know, a few multiples of the average income. Now it's like 10 times the average income. And so to most young people in that lower end of the income bracket, it just looks like a complete impossibility. Anyway, I'm not sure. So
Yeah,
I'm definitely sympathetic. I mean, I definitely feel it. Like I couldn't. I live in the city, and so things are cost more, but salaries are higher. But it's just a complete impossibility for me to think about even buying the apartment that I rent. It would not work at all. I would need to take on $1 million mortgage, and the payment on that, especially at 6% rates, it'd be like more than the entirety of one salary.
right,
It just doesn't work.
right. So, yeah, I mean, you basically said it. So, like, I just wanted to mention all that just for, um, just for a little bit of context, like as to what's going on out there. But I agree with you. Like, I'm very sympathetic to the fact that housing really shouldn't be this tough. And I can also relay for a brief second there when my wife and I were trying to figure out where to live. Like, should we go back to where I was raised, or should we live outside New York? We did look at houses around the New York area, and I got to say, if I had to still work in the city, my commute would be like an hour and a half before I could get to a house that I could like
Yeah,
afford,
that's what it is.
which is like unacceptable. I think commute over an hour is like really tough. Luckily, kind of just the way everything worked out, I do commute to the office, but it's not an hour. But it's true. Like if you live in a city, man, it's housing is brutal. Like with that in mind, let's go. How would we go about like fixing it? How would we go about addressing this? So good old supply and demand, Joe. What is a price? It's just money per good, money in the numerator, good in the denominator. Money is the demand, good is the supply. If you want to think of it like that, more money or demand, price goes up, vice versa. More house or supply, price goes down. So that's like 80% of economics right there. So then if you actually turn back to like the policy proposals that start, you can kind of frame them in terms of like a supply side or demand side policy proposal. And believe it or not, I started reading Ezra Klein's a book on abundance. I know. I look. Hey,
You're a bit of a masochist.
I got the free Kindle sample. All right. And I read like enough of it. I found myself kind of starting to skip paragraphs, and I thought it was, I'm not going to get the whole book. Okay. But he did mention kind of an interesting perspective, which is like the left. He keeps framing the whole discussion in terms of the left this and the right that, which kind of bothered me. This guy just like
Left
can't
good,
not
right
see
bad.
things in terms of, well, he was critical of the left. He definitely, there's a lot of, he criticizes the left a lot in there. Okay. To his credit. Regardless, he just can't like not see the world in terms of like left and right, and it's kind of maddening. Like Ezra Klein sort of framed, the left kind of looks at the demand side more, and the right looks at the supply side. That was kind of interesting framing. So Kamala Harris, she had a proposal a little while back when she was campaigning, and they said give
Oh yeah.
25,000. Remember that we did an episode on that.
Wow.
25,000 to people for a down payment. Now that's a demand side policy, and I think it's a bad one. For the same reason I think these policies on like the 50-year mortgage or the portable mortgages are bad. Like these financing tricks.
Gimmicks, pretty much.
So like, yeah. So, I mean, these financing tricks are arguably a demand side policy change. But all they do is make things slightly more affordable, increase demand, and the result will just be to increase the price. And you'll kind of return to this equilibrium Demand side policies that result in more money into the hands of the buyers just makes sellers happier, not buyers, right? I mean, they're the ones who actually get the money, the benefit from a rise in price, but the house would still be just as unaffordable. Because remember, and this is like super key, suppliers, like homeowners, are constantly pushing up on price as hard as they can, always. And I remember, my mom when she listed kind of her house at a high price, and we were trying to sell it at one point. She kept saying, "We only need one. We only need one. You only need one person to agree to that selling price." And so while 99% or whatever people that show up at the house and scoff, we just need that one person who's willing to pay, and we'll wait months to find them. Right? I mean, think about that. That's like the mindset of a seller. So
Yeah.
the upward pressure on price is always there. And I can give you like a thought experiment. So imagine, like Joe, what do you think would happen if, for instance, they said no more real estate taxes? You no longer had to pay the additional $700 a month in escrow for real estate taxes. Okay. So would that make housing more affordable for those without a home? If you didn't have to pay the $700, for real estate taxes.
Like if you're looking for a home, you have your budget in mind. Now
Yep.
all of a sudden, if you can do 700 more a month, I just mean that if you're paying less in a monthly tax,
Yep.
you can say, "Oh, I can put that extra 700 a month to a larger mortgage now."
Right. Yes. And the sellers know that. So you're still screwed. I mean, you're still paying like the same amount.
Demand side policies are no good.
If you did get rid of real estate taxes, housing prices would soar. So I would be super happy, right? But people trying to buy the house would still be just as unaffordable. So what you need to do, and like maybe unexpectedly, is like, almost lower demand or raise supply. Now, people have thought of this before, right? I mean, so they'll blame big institutional investors and private equity. There's a really good paper by Brett Christophers from 2023 called How and Why U.S. Single Family Housing Became an Investor Asset Class. It's really well written. It reads more like a fiction book than like a dry academic paper. I'd recommend it. But just to summarize it here, after the 2008 financial crisis, and after the Federal Housing Finance Agency took over Fannie and Freddie, they had this huge amount of REO, or real estate owned. So like, just for a little bit of background, banks have a balance sheet item called OREO, and it stands for other real estate owned. And what that line item is, it's properties that they repossessed in foreclosures, but they don't want that. Banks don't want to have OREO, right? Managing properties is not in their business. So once they get an OREO, they look to sell it. And in 2012, this is when I think this they stood up this initiative called REO to Rent. Fannie and Freddie had, and this is according to a statement by Meg Burns, who was the senior associate director for housing at the time, had 180,000 REO properties looking to sell. So what they do? They invited investors and, quote, gauged their appetite for a new asset class, end quote, in order to, quote, stabilize and improve market conditions, end quote, right? Now that's another way of saying, right, I mean, they invited these investors to pump some demand in there and like keep the prices from this downward spiral. Because remember, people don't want housing prices to go down because they see that as like wealth. They see as though, you're hurting the wealth of the people. So then, so fast forward a little bit. Now, large private equities got a lot of heat for this recently, right? People started to blame them for coming in and buying up, quote, whole communities. BlackRock was getting like so much heat that they had to issue a statement saying that, guys, we don't invest in properties. People were confusing BlackRock with Blackstone. Just a little side note. If we wanted to zoom in on the actual housing market, like what's the market? How fragmented is it? How many people of all the entire stock of houses out there? How many of them are owned by individuals? How many of them are owned by large corporations? Right? How many of them are owned by smaller people that are rented out? There probably are like around 150 million housing units out there. And the majority of them, I think, like ownership rates out here are like 65%. Um, Now, like of the 35% of those who rent, then the landlords out there, it's not a concentrated market, which is to say, it's not as though a couple companies own that 35% number that are renting them out. It's mostly a lot of these. It's very fragmented. So there are a lot of like small companies that are just all over the place, or even just individuals, right? So a lot of rich people, for instance, will own a couple apartments, a couple places, and they'll rent them out. The large investors own maybe 2%. Now we don't have like exact numbers here, but the ballpark. The other kind of important thing is remember that 2% of the housing stock that's owned by really large investors. That's average nationwide. Now this changes a lot if you look at specific regions. So like Atlanta, Georgia, I think is like the number one, like for in terms of the high percentage of ownership held by large investors. But it kind of moves around. So point is, you can't really blame the super large investors, I think.
Why do you think that is?
Georgia was like a good target because of the way in which they sold the houses in bulk. Like they went to auctions, and there was something that was deemed Super Tuesday, which I think only Georgia did, which was they did all the auctions on Tuesday. And they described this scene whereby, bankers or Blackstone, these investors would get on a flight from New York, like a red eye, show up Tuesday morning with a whole bunch of travelers checks, buy up a whole bunch of houses, and then fly back with a bunch of deeds. So in a lot of ways, Georgia was just kind of just by the fact that they sold them all on a Tuesday, just made it easier for them to buy up in bulk. I didn't, you should go really
Hmm.
read that paper. They explain like why large investors didn't invest in individual mortgages. They knew that it was extremely like lucrative, that you could own, it's pretty nuts what you could do with a like an apartment building. It's pretty crazy. You build it, you get the mortgage out, you fill it up with people who basically pay you to pay off the loan to pay for the building, and then you can sell the building. Like it's just the amount of return that they described in there was nuts. But the problem was you just can't do it at scale. It doesn't scale well. With the 2008, financial crisis, among a bunch of other problems, it's like geographically really diverse. That's challenging. But with the 2008 financial crisis, they could buy these things in bulk, right? And they can invest, millions, hundreds of millions, which is the kind of numbers that they'd actually be interested in looking at. Then it became more viable. But like anyway, super interesting paper. If kind of we wanted to look at how do we actually like address this, so we're the government and we're trying to figure out a solution to the housing problem. Now you could either make it easier for landlords or you can make it harder. And when I say harder, the I'm usually looking not at like,
Regulation?
I'm not usually looking at regulation. I'm thinking more like tax, just from a pure like economics perspective.
Raise taxes to make it more difficult for
Make it
landlords to
more
buy?
expensive. Yeah. So imagine like, if you wanted to buy a second home, or if you wanted to buy
Right.
an apartment building or something, or if you wanted to buy an apartment and it wasn't your primary residence, right? We're going to stick a tax of 100% on that.
Hmm. Yeah. Yeah, it makes sense.
Okay. And then I guarantee you landlords are going to think twice about buying it, because now all of a sudden they put $1 million into a place that was worth 500, but they got to make back that million.
Right. Okay.
So then they're not going to touch it. So then you've kind of lowered demand. Maybe that's one way. But maybe that's dumb. I think the other way would kind of be to kind of ease on, just give them a tax incentive. I don't know. Maybe make it easier so that they don't either, so that the returns are better and people can start um, a little more competition out there. And maybe that will lower rents. Or is demand just still too high for guys like for Joe, that they wouldn't do it? They would just see a fatter profit. It's tough
Yeah,
to
I mean,
say.
yeah. Well, I mean, a lot of our arguments earlier was that yeah, it would just benefit the homeowner, and they just hang on to it even more.
Yeah, it's tempting. Like your first instinct is to just like make it prohibitively expensive for landlords to do it. But then there's this other problem where it's like, I don't know if it makes sense for us to tax or regulate a product out of existence. Because like there is a time when I wanted to rent. It's just easier. Right. And it lets me get up and eat and leave whenever I want to. And in
Right.
a way it is cheaper. Um, I'll be honest, Joe, I don't
I
really
mean,
have a great answer here for you. I mean, and that's on the demand side. I think the supply side is like so obvious that it's kind of like hard to even I don't even want to spend time on it. I mean, yeah,
yeah,
ultimately it's the supply side, I think, issue, right?
yeah.
So like
It
somehow
seemed
encourage heavily people to construct new buildings, just make it as easy and as cheap as possible. Just build more housing. Like that's ultimately the answer. I don't think this demand side stuff with the 50-year mortgage, the portable mortgage, the 25K for a down payment, none of that really makes sense. I'm just trying to think of
no.
something on the demand side. But I don't know if there's a whole lot to squeeze out there. It's like a supply side problem. But I think people already know that. Now, anything you want to say before I get to this, to the,
Bring it on, Luke.
yeah, I don't think really people want home prices to go down. They like it. The majority of people, as we pointed out later, home ownership rates are, call it like 65%. The rest is rent. Those 65%, so more than half, they want housing prices to go up. I'm sorry, because it means their net worth goes up. Now, obviously, like now, I support efforts to make housing more affordable. I do, even if it hurts my net worth. Would I like? But at the same time, it's like when at some point in the future we look to sell this house, am I going to be like take whatever the realtor says the value is and then chop like 10% off of it? You think that's going to happen? I don't think so, man. I think I'm going to try to get the best price. You know,
Right.
so um, I, I think that's the dynamic that we're playing with here. That's
Definitely.
the challenge that we're facing here. Um,
Now, it is kind of odd in general that because absolutely agreed. That's how everyone thinks. That's the reality. That's how the modern financial system works. It's well understood. The majority of people's wealth is in their home, but it's but why? I mean, it's this illiquid asset that you're living in. Like we've got this idea now in America that prices just keep systematically going higher and higher indefinitely. Like you just said, you just sit in your house and you become more wealthy. Is that does that make any sense? Like like you think about wealth generation, I'm like really kind of abstract this away a little bit. Is that a good assumption to have in a society? Like just having a home makes you wealthier? Like what sense does that make? I understand exactly how it all works and why it works and how we're here, but just like really, really, I don't know. Like you think back to like way back in history, a couple hundred years ago only, that idea would sound silly. I would think. You go out and build your log cabin somewhere. Like it doesn't get better and better just by doing
well,
nothing to it. It's kind of degrades over time, just like any other
owning
physical
land,
asset.
certainly is a mark of status. And that's kind of partly what it is. But I take your point. Definitely the idea about wealth, like the way economists think about wealth generation, like what it means to generate wealth. It's not like printing money. It's how much goods can you make, how fast, like for a certain number of people, how much stuff is produced. And housing
Right.
there's no production there. It's just sitting there. And yet, for
Hmm.
some reason, we associate that, even though nothing's being made, wealth is still going up. And that's kind of backwards. That's
That's
a
what
little
I mean,
messed up
kind
to
of
your point.
fundamentally.
Yeah. That's a good point. I never really thought of it like that. I'm generating wealth on the back of the scarcity in the housing market,
Right.
which is kind of BS to your point. That's a good point. Never thought of it that way, Joe. I think it's a good place
Well,
to it's a good place to stop it. That's all I had for you, Joe. Hope that was interesting. Hope you learned something. I know I learned a lot. I really didn't. know a whole lot about the housing market before this. But that was interesting. So thanks for giving me the opportunity. This has been the Root of All Evil podcast. I'm Luke.
I'm Joe.
Yep. See you next week.
See you then.